It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Wednesday evening, June the 1st, 2016. Got another exciting newsletter in store for you tonight. We got crude, S&P, gold, and of course the euro. We have some great trends to work with in tomorrow's session. Crude oil, S&P, and the euro are all bullish, while the gold, although in correction mode, is bearish going into Thursday's trading session. Got a great newsletter in store for you guys. Hope you had a great month of May. We're here to kickstart the month of June with another great video and get some strategies for you guys tomorrow. Before we jump into our charts and take a look at the plan for tomorrow, I want to remind you the only place to watch the full-length version of this nightly newsletter is on our blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video, and then it'll take you over here to our blog at Sideways Markets where you can watch the entire full-length version with all four markets and all the analysis. While you're here watching the video, don't forget upper left-hand corner, if you're not an advanced member and you're in our trade room as a member, grab your free pass, come out and join me in the trade room as a guest this week or next week. Upper left-hand corner for your free pass for all the guests out there. Lower left-hand corner, don't forget to join the mailing list. Every evening, I'll send you an email when the newsletter is ready to be watched. Promise no spam and nothing else besides the nightly newsletter on that name, email address, and then verify your inbox, and you'll join our newsletter mailing list. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Click on that link below the video, and you can have all the charts from tonight's video on your computer ready for whenever you need them in tomorrow's session. And of course, I get this question all the time. What does it feel like to be a member? What are the strategies that we use? What does it mean to be a student here at School of Trade? Get a great free trial membership. You're going to learn more with me on my trial than you will anywhere else on the interwebs. I can guarantee you that. Grab your membership on the right-hand side of our blog. And don't forget, I've always got someone standing by 24/7 to answer all your important questions. Don't be a stranger. No matter what the question is, big or small, use that live support button on the right-hand side. I look forward to helping you guys out along the path of launching a professional trading career. Let's jump right into it, guys. You get the plan here for tonight. Tomorrow, Thursday, June the 2nd. What's the schedule look like? And then we'll jump into some charts here. Before we talk about tomorrow, though, let's make sure we check and see what's happening this evening. We do have, retail sales here from our good friends in Australia. Retail sales from the Aussies at 9:30. Probably not going to be a huge market mover, but you may see a little bit of the dial move higher there on the euro, possibly on gold for the retail sales. Not a big number there. Usually the big ones are going to be from China late in the day, at least the market moving, right? The market moving events. We got one of those tomorrow night, by the way. And of course, tomorrow morning, we got some big news coming out of the euro session tomorrow, Thursday, June the 2nd. I can't believe we're already talking about June. Hope you guys had a great Memorial Day weekend, by the way. I had a fantastic weekend with friends and family. Finally got some beautiful weather here in Los Angeles. Hopefully the weather is turning to the good side here for you guys here in the U.S., in the northern hemisphere, I should say. And, of course, buckle down for the snow and cold in the southern hemisphere, of course. Let's see, tomorrow morning we got the 4:30 a.m. PMI. That's going to be Red Star, but I think everybody's going to be watching the ECB announcement tomorrow at 7:45 a.m. Just a heads up, this is very similar to the FOMC announcement where you get the announcement at 7:45 tomorrow, and then, of course, Super Mario will have his press conference where he gets to dodge and duck and dive, right? All those reporters' questions tomorrow. So the good stuff tomorrow morning is going to be in that 7:45 a.m. to about 9 o'clock. We're going to see some volatility coming out of the European Union, right, the ECB, tomorrow morning. That's going to be a big announcement, right, as we go into this third quarter of the year. So somewhat important news there at 4:30, but I think everybody will be watching that 7:45 a.m. ECB announcement tomorrow. We then, in the U.S. session, we go into the jobless claims, typical Thursday morning. You know, the jobless claims report, it's a Red Star news event, but you know, honestly, ever since the JOLTS report came out, the JOLTS report takes really center stage compared to the jobless claims. The jobless claims report has been kind of swept under the rug lately, so it hasn't really been that important over the last few years. So probably not going to get too big of a move of the needle tomorrow morning at 8:30 a.m. I think most folks will still be reacting to the ECB announcement. Now, don't forget, whenever there's a Monday closing, that means the inventory report is pushed back a day to Thursday. Let's go down a little bit further here, and we're going to see the 11 o'clock petroleum status report tomorrow morning in the U.S. session. So really, for the most part, the big news tomorrow is going to be that 7:45 ECB announcement. That'll get things moving. You're probably not going to see oil or the S&P react too badly to it, but gold and the euro will definitely be responding to it. Little bit of a yawner there at 8:30 for the jobless claims, and then again all the crude traders. And don't forget, the S&P loves to kind of piggyback on crude right now, so crude and S&P definitely be affected by that petroleum status report tomorrow morning at 11 a.m. Eastern time. Don't forget, we open up our trade room tomorrow, 8 o'clock Eastern time. We'll be doing all this together live in real time, and we'll talk about the news out of Japan and China tomorrow night. Right? We'll cover that in tomorrow night's newsletter. So be aware of that. If you got the London trading session tomorrow, you got Mario Draghi going to be speaking tomorrow morning at 7:45. That will be a major market mover, and then finish the session with inventories at 11 o'clock. And remember, we're going to do it all together with all of our students here in our trade room tomorrow at 8 o'clock Eastern time. Let's go to crude. We'll go crude, S&P, gold, and we'll finish up with euro. Crude is bullish and trading inside a range this evening, which tells us to look for bear traps at the lows with a target back up at the highs. The bears had control at the beginning of the session today, but the bulls took it back shortly after 10 a.m. Eastern time with a strong move that turned into a trading range, and the bulls just failed at the highs, which tells us to be looking for traps back at the lows of the range, as well as levels of support for tomorrow's session. The bulls will be looking for opportunities at the channel low, that big channel, the range lows, and the battle zone down at 48.50. Those are all support areas the bulls will be looking for tomorrow with a target back up at the highs. Sellers need to be patient right now. Really, in my opinion, the sellers either need to go now or they have to wait a lot more, because we're going to see a lot of buyers coming in to buy these dips on crude going into tomorrow's session. The very first thing I see when I look at this chart right now is that these bulls are in complete control. If I was going to describe this market to somebody who couldn't see the chart, I would say the buyers were in complete control with a measured move up to a triple measured move into a trading range that recently failed at the high. This failure at the high tells me that sellers, you either need to get to it now or you've got to wait until it breaks down below the battle zone here at 48.50. The bulls are obviously in complete control of this market right now, and whenever we can see a market that is in complete control like this, we know it's very difficult for the bears to make money in this environment, which means it's nothing but buying opportunities here. Buyers are not going to want to buy high. They're going to want to be buying back at areas of support. Areas of support will include the low of the range, the measured move support, the trading range expansion level here at 48.44, and the battle zone at 48.50 and 48.32. Now remember, as this market pulls back, we're looking for that sequence of failures, in this case, seller failure into strength, strength into pullbacks, and pullbacks back up to that target back up at the triple measured move, and possibly a triple up target for tomorrow. In a bullish market, we assume that buyers will be waiting below every swing low. We assume that buyers will be waiting as this price pulls back to, of course, get into this, basically to buy without buying high. It's a bull market. Buyers want to buy, but they're not going to want to buy the high. They're going to want to buy it at the low. It won't be until we can break and stay below what I've kind of nicknamed the battle zone here, that 48.50 to 48.32. What typically happens in situations like this is as the price pulls back, it'll pop higher, it'll pull back, pop higher, pull back, pop higher, pull back, pop higher, and then the minute the sellers know they're wrong, they will exit this position, and you'll see a very strong spike down. When you see that strong spike down, I'm looking at you, bears. When you see that strong spike down, that is the buyers knowing they're wrong and exiting this trade. That's where the moving average comes in, and you look for that next pullback to finish the job back down. So you really can't be a bear unless you want to do it now, because I definitely see this as a failure at the high, buyers aren't going to want to buy high, right? Sellers want to sell high. So when it spikes out like that, obviously this is going into news. We had news tonight. There's news tomorrow morning as well. This is the API inventory report being pushed back 24 hours because of the news. Typically every week we get a Tuesday at 4:30 and then Wednesday at 10:30. I talk about all this in my beginner's course. There's a chapter in the beginner's course on economic news and trading calendars. It's all in the beginner's course for all the students out there who are serious about building a good foundation of knowledge. This is news-based, so it may not be as serious as it looks, but that's a pretty big bear candle there, and obviously buyers don't want to buy that high. So we assume now that big sell off that high is buyer failure. That tells us that price will now go towards that low where buyers will now be looking to scoop it back up. So buyers looking for, again, failure at the low, back up, failure at the channel low, back up, failure in the buy zone, in the battle zone, back up, and it won't be until we see that strong spike lower, probably with that strong, right? Strong spike lower, followed by that next pullback, that sellers will be able to participate. You either either get in now or get in after you get that pullback, and you see those buyers finally give up on it tomorrow, right? So bull channel, of course, going to be major support at that low. Trading range, major support as well. Heads up on this trading range. The trading range gives you a couple range expansions. Resistance overhead, expansion, support below. This is really where those buyers really want to be getting in here. Down around that range expansion support at 48.44. Down around that battle zone area of support at 48.50 to 48.32. That's really where the buyers are going to want to be participating. And of course, you got the triple up here. That triple up makes for a great target overhead. The only real variable for tomorrow on the oil market is going to be that inventory report, right? I wish they did this every week. I wish it was always at 11 o'clock. You know, they typically stick us with that 10:30 a.m. news. It's the only thing I can complain about when it comes to crude oil. I love trading crude, but every Wednesday at 10:30, and of course this week because of the holiday on Monday, it's Thursday at 11 a.m. So that's pretty much the only variable for tomorrow. I'll be sitting on hands 15 minutes before that news comes out tomorrow, and at least 5 minutes after that news comes out tomorrow. But again, it'll be coming out at the end of the morning tomorrow, so we should have plenty of opportunity here between that 7 a.m. kickoff of the U.S. session, right, and then 11 o'clock news. Just a heads up, though, tomorrow morning we got that news at 7:45, right, so be aware of that, and then, of course, at 11 o'clock for the inventory report. Buy those dips on the oil. Buy those dips on the oil, and again, if you're a seller, either you got to get in now or you got to get in later tomorrow after the news comes out. Let's move on to the S&P. S&P's been a little bit sluggish over the past few weeks. Finally got some pretty good trends going here on the S&P right now. We're bullish and trading inside a wedge this evening, which tells the buyers to stay patient for traps below prior swings with a target up at the vertex of the wedge. Looking very similar to crude oil. A little bit different, but very, very similar strategy now on the S&P as we just talked about on the oil market. The bulls took control shortly after 10 a.m. We call this market the crude shadow right now. S&P has been very, very consistently kind of shadowing the crude oil market. Remember, guys, though, don't forget there's a big difference between correlation and causation. It's very difficult to make profit by just simply saying that the S&P is correlated to the crude oil right now. It can be correlated all you want, but good luck finding reliable trading opportunities to use that correlation. What we need is causation. I need to know that when market like crude oil moves higher, the S&P moves higher with it, not vice versa. The hard part is a lot of new traders waste a lot of time trying to find ways to make money when there's correlation without causation. There's never going to be any direct cause and effect in the financial markets. And anybody who tells you there is either lying to you or they're extremely naive, right? There's never any one reason why these markets work. It all builds into what's happened in the recent past. That's why we use technical analysis and we keep an open mind. So, back to the plan here. We've got the bull, right? We got the bulls in control after 10 a.m. this morning, and that bull channel has now turned into lower highs and into a bull wedge and a possible spiking channel on the way to reaching a triple measured move target up around that, right? Almost at the 2100, right? 2099 and a quarter. All right, the measured move target tells us that most of the bulls will have taken profit at this major resistance level overhead. And the wedge is the most important. That tells us the most reliable trades will be after a trap low below prior levels of support on the way up to the target around 2102 half and a possible triple up target at 2107. What you do not want to do, all right, here's what you do not want to do. First things first, when we see a wedge, all right, when we see a wedge,